Hi, everyone. Jen Logis, One Degree Capital. We have a lot of questions that are centering around this whole discussion on how to know if you need to return your payroll protection funds. So we wanted to put this video together to give you some information on that. Look, we all knew that the funds would be scarce when this program first launched, and we knew we needed to act quickly as business owners or risk the funds not being there when we needed it most. So for business owners, a lot of us took this ready, fire, aim approach. It was just what we had to do at the time. Well, now it's time to aim. What is causing all of this? Probably the big thing that's happening right now is the lack of guidance that we're getting from the SBA and Treasury on exactly what they're looking for on this loan. When it first came out, everyone was being told, go out, get it, just get the funds, support your business. Well, now we're starting to hear some things of, well, maybe you shouldn't have taken this loan. Maybe you didn't really need it. And there's a lot of talk about questioning whether someone needed the loan, but there's not a lot of discussion on, okay, how do you make that determination? So we're not getting any official guidance out of the SBA or Treasury. Even as of this morning, today is Tuesday, May 12th. We still don't have information. We do expect more to be coming in the next couple of days. But there's a deadline looming of needing to give the funds back if it turns out you didn't really need them according to their rules. But they haven't said what that is yet. So that's probably the biggest thing that's causing this. The other is we're getting some really dire emails from a lot of people, and they're forwarding them to me. We're getting dire emails from the banks warning business owners that, look, this is all on you. You have to make the decision as to whether or not you need these funds for your business. We can't help you. This is all on you to make that decision. And if you make the wrong decision, you could be criminally charged with fraud. Okay, we understand that, but that's not helpful on figuring out how do you determine what if you're able to keep these funds or if you should be thinking about giving them back. There's also a lot of media attention to this question because, quite frankly, as business owners, when we lack guidance, the first thing we're going to do is go out and try and find it, and we're going to click on anything that talks about this. So it just is kind of feeding into this whole hysteria, as you would probably want to call it, looking at where do we get this information? How do we turn? So we're all afraid. We don't know what to do, and we're not getting any guidance. So what do we do? So how do we aim is really the big question. Lacking any official guidance, here are 3 questions that you can ask yourself about your business. And probably the biggest thing that I would suggest you do is document your answers. That's going to be the biggest help for you going forward. So what are those 3 things that you can ask yourself about your business to help you make this really important decision of whether you need to give these funds back or not? First of all, think about your customers. Whether you are a B2B business, a B2C, or a B2G, if you're a government contractor. Think about your customers and think about the next 6 months. How likely are your customers going to be buying from you at normal levels, pre-pandemic levels, over the next 6 months? Now, for most of us, that's going to be, no, it's not going to be the same. There is no more old normal. Everyone's talking about a new normal, but no one knows what that is. Well, try and quantify that. Try and look at what's the size of the gap between what you expected to come in over these next 6 months and what you think the new normal is going to be. That's going to be a judgment call on your part. No one knows your business better than you do, or better than some of your key advisors. So if you have a board of advisors, if you have a board of directors, this is where you want to get their help in making this determination. But try and quantify that. So what's the size of the gap between what you expected to happen for the next 6 months and now what you think might happen for the next 6 months? Is that reduction in revenue? Is it a 30% reduction? Is it a 50% reduction? Are you 100% closed right now? And it's probably going to be 100% for the first 3 months and maybe 50% after that. That's where you really need to kind of put pen to paper and think about, what does this look like for your business over the next 6 months? Having that number to be able to quantify it can really help ground you in knowing, okay, what's my new normal going to look like? This gap in between what your old revenue was and what you expect your new revenue to be would be your economic need. that's the impact of this pandemic on your business. Now, for some businesses, it really could be business as usual for the next 6 months. For example, if you're a B2G company and your government contracts are not really impacted, you're still getting paid by the government. There's no, the closure is not affecting you. All of your workers are remote, so it's kind of business as usual. Then yeah, you probably have no economic need for for justifying having these funds. However, that's a judgment call on your part as far as how this is going to impact you and your contracts. B2G is just one example of ones who may have a lesser impact on their business. For other businesses, it could swing the other way. They could actually have an increase in business over the next 6 months. Some extreme examples of this would be Netflix and Zoom, who have been, as everyone knows, have had users surge over here recently, and they expect business to be booming over the next 6 months. Also, another kind of closer to home business would be like a cleaning business or someone whose business it was to go and disinfect office spaces, for example. As things ramp up, they could actually have a surge in demand and need to hire more workers to meet that demand. Now, keep in mind, though, that even though they would be using these funds to hire more workers, they're actually expecting a surge in business. And that is considered to be a growth in their business and not a retraction. So if they're actually anticipating that your customer base, that your revenue would grow as a result of this pandemic, you are going to have a hard time justifying that you need these PPP funds. The payroll protection funds are not designed to fund a growth. So yes, it's for payroll, but it's not to grow your payroll. It's not for new business activities or new business ventures. This is to support your ongoing operations. So do have that in mind. If you fall into one of those businesses that does expect a growth, that could impact your ability to utilize these funds. Second question to ask yourself is, does your business have access to, either before or the ability to apply for and get a line of credit that would cover that gap that you calculated before for the next 3 to 6 months? Now, for some of us, yes, you had a business line of credit. You have one that's in place for your business. It could even potentially meet the needs of that identified gap that you have. But it could also be that you couldn't afford the payments on that line of credit for the next 6 months with the retraction in your business. So that is something to keep in mind as well. Having access to and being able to afford the payments of kind of go hand in hand. So just because you would have access to something doesn't automatically mean that you wouldn't be able to utilize the payroll protection funds. Similarly, everything that we're hearing is that the SBA, when they're looking at your access to capital, as you sometimes hear referred to, that's a business's access to capital. That does not apply to the business owner. And that's at least all the guidance that we've received so far, is they're not looking, there's no expectation that if you have equity in your home, they're expecting you to go out and take a home equity line of credit and use those funds for your business. Everything we've heard informally from the SBA is no, that's not something that they're factoring in. Everything is about, what does the business have access to? If you did in step one, you anticipate you have a 50% reduction in your revenue, and you don't have a line of credit that would fit that need, then yes, that does go further into explaining why you would need a payroll protection fund to help support your employees during this, because you're not going to have the revenue levels and you don't have access to some other source of revenue that would help you get that and close that gap. One other question to ask yourself, the third and final question, would be, without these funds, would you have had to lay off workers to preserve cash? Now, this goes to the heart of the payroll protection program's intent. The intent of this program was to prevent people from being laid off and having to go on unemployment. That's a little bit lost right now on the program's intent, because this program was meant to go hand in hand with what's referred to as the EIDL loan program, which is the Economic Impact Disaster Loan SBA program. That program has gotten some attention from the media. I would say not enough. because that program is meant to cover a business's operating expenses. So the thinking was, if you were able to utilize two programs, one to help you with your payroll and shore up your payroll, and another, the existing disaster loan program, to help you with other expenses like rent, utilities, those ongoing operation expenses, that those going hand in hand would help a business survive this crisis. The challenge and the reality is that the EIDL program was vastly underfunded. It actually was cut off at one point in mid-April from even taking more applications. It is so backlogged with applications right now, and they've actually just recently changed the guidance on what they're going to be using the funds for and what the dollar amount was. Used to be 2 million, now they're talking at most 150,000, which for a lot of businesses is just not going to help with their operations. But back to payroll protection. So payroll protection was supposed to just provide you with those, with helping you to prevent laying off workers. The EIDL loan is a separate program, and that's more for operating capital. This is at the heart of the employers. So what you need to look at for this loan forgiveness and for this taking out the payroll protection to begin with is, would you have had to lay off workers to preserve cash if you didn't receive these funds? That's the question to ask yourself. Those are the three questions to keep in mind as you're going through deciding whether or not you as a business owner need to return the payroll protection funds. Think carefully about these questions, and most importantly, document your reasoning. It doesn't have to be anything super formal. If you have a board of directors and you hold a meeting, then yes, you want to have an official document for this. If your business is not set up that way, you don't need to go run out and get a board of directors. Have a meeting, talk with your advisors, who you do have, your close advisors, and document even in a memo to yourself of, okay, here are the things I looked at, here's the reasonings of why I believe that, yes, my business needs these funds in order to survive. So if you don't have other advisors, you can talk it over with someone who understands the banking and loan contracts if you're unsure. Your attorney is a great option if they specialize in business needs. Keep in mind that attorneys are like doctors. They specialize in different things. So if you have an attorney helping you with, say, your trust and wills, they're probably not going to be a good resource for business strategy. An independent banking advisor is also another great option. As firms like ours, we have vast knowledge in banking, but we do not work for one bank in particular, so we keep that objectivity. As you've probably seen with the payroll protection, your bank is probably not the greatest resource for helping you determine these options. They have their own liability to worry about, which is why a lot of you are getting some very ominous warning emails from your banks. I appreciate everyone forwarding those to me. Please do keep them coming. It does help to know who's out there supporting their customers at this time and who isn't. That does help. So you will likely see more guidance from the Treasury in the next day or two. We have that looming deadline of having to make the decision of whether or not to return these funds by the end of this week. It's not going to give you much time when they do come out. It's not going to give you much time to decide whether this applies to you or not. Thinking through the questions we just outlined in this video will hopefully help get you a jump start on that. We hope you find this information helpful. If you do need more guidance, if you have some general questions, feel free to post your questions in this YouTube channel. We do check those. We do answer them. We will certainly answer those as best we can. If you want private guidance, certainly you can contact our office about some engagement options. In the meantime, we do wish you all the best, and we do hope that you stay well, and God bless.